Morning everybody, and welcome to Serene Education with another day of analysis with us on this very bleak morning here in Wales. Just going to be going with the four majors. Just be aware there's a hell of a lot of news out these two coming days. Tomorrow, bank holiday, Good Friday across the globe. But the markets, the Forex markets that is, are still open, and we have non-farm payrolls tomorrow. But before we even get to that, we'll also have the unemployment rates. We'll also have the British official bank rates, interest rates announcements today at 12. German industrial production month-on-month figures, manufacturing production month-on-month figures for sterling this morning at 9:30 GMT. We have MPC rate statements. This is tentative, it's an all-day event. Going this afternoon, we have CAD, or Canadian building permits month-on-month. We have an employment change for Canadian. And then this afternoon, we have the unemployment claims and the unemployment claims for the US market. Good Friday. The markets will be closed except for the currency markets, which we will be trading, and non-farm payroll will be out tomorrow without fail. So very, very important. So a lot of news today. Check your news announcements, see how much it is. If you aren't in any trades, I'd rather say away. Rather give these 2 days back to the market and look at a clean, fresh slate come Monday next. And that is, let's crack on with the euro against the US dollar. Okay, so weekly, I've drawn some support and resistance lines. These are pretty much pivot lines from previous support and resistance levels, and you can quite clearly see this week at the moment now is looking very, very drabby. Primarily because, as you'll notice before, we have two pivot lines that have come into to play here. Quite a noticeable consolidation area here between two of them. And you can see price actually battled a couple of weeks ago, even a month ago, to break above that. It would have been fantastic if price had actually climbed above the 134.50 and continued, because you can see there's quite a lot of openness between where price was at 134.50 and these highs here at 137.50, back up towards the institution and moving average. But that didn't happen because we had a bearish engulfing at that same area, and it's brought price back down to where it is currently trading. Now, if you look at the lows, swing lows, you can quite clearly see swing low, and then we've had a failure here. So if this candle closes tomorrow and it's still as bearish as it looks at the moment, then it's definitely look like we're going to see potentially a major resistance level, and we should see euro starting to look bearish sentiment wise for the foreseeable future. If that's the case, then we could see price moving back to as low around here at the 130.05 mark before we see the 128.50 mark coming into play. Just going to move on to the daily time frame. And you can see that what I've done is I've taken you can see price has pretty much been moving sideways. We've had a high and a low on this time frame. Okay, from the early the January start up to mid-February, you can see we were moving higher, and now we've started to consolidate. So I took the low over here, for example, in January to the high in Feb, and I put a Feb retracement, and you can see that the 23, the 38, the 50, and the 61 have been attempted in the past. Well, since here. For example, since these tops, and you can see where price is testing this as we speak. You can see that price yesterday in particular broke through the 38.2, and we're now seeing price pulling to the underside of the 38.2. So a very small trading range on the Asian session going into the European session. It is paramount, if this is to continue to be still bearish outlook, to find resistance now under our prior support. See quite clearly there's a lot of support through here. Now to find resistance at the underside of this before we see another continuation lower to 13.05, then the 12.95, etc. So this area very, very important. I suggest you make a note of that. So if you look at any intraday charts, as long as price is trading below that going into the US session this afternoon, it's still favoring longs to the downside. A lot of bearishness here, a lot of momentum down, negative side from this consolidation here. And CTC is in our favor. We have red above the board, so looking favorable on the daily for further shorting opportunities, as long as it stays below that area I mentioned, which has to be that 38, and here it is on the chart on our 4 hour. So I've taken that line, I've drawn on here so I can clearly see it, and I can see that the 61.8 is also part of it. If I take the low, if you have my intraday charts, the high, recent high, I can see that the 61.8 is the last port of call in this pullback. So now it's way overextended. In doing so, it's below all moving averages, and if it comes unstuck here at 1600, then ultimately what we're wanting to see is a nice bearish engulfing, okay, to confirm that sentiment is still looking negative, and then we could see another lower swing. And if it swings lower, then ultimately we could look potentially back down here at 13,300, which happens the all-time support for this pair way down here. So there's a lot of movement between where price is trading now and this 13,300 mark. In fact, there is a good couple of pips. So let's see if we can actually see price today failing at this 13,1600 mark. If it clearly does, then we should be looking for ultimately a push further down. Break higher than this, then start looking at potential the 50% retracement here as your first target at 1320, second target 38.2 here at 1324, and then the 23.6 as your ultimate target before we see a reattempt of those highs we've seen recently. Looking at the hourly chart, my entry chart, you can see quite clearly there was more happening above the RSI because we were trading above the institution as well, and we were in a positive trend. However, you can see price topped out not too long ago. A lot of hesitation around this area, around the 1336, 133700 mark. A lot of wicks to the upside, telling us there was a lot of exhaustion. There was more sentiment for bearish, for selling contracts than buying contracts, and RSI definitely dictate or indicated there was a slowdown. Okay, so it's clear ceiling level. You notice we kept tempting the prior highs, but RSI was still dropping. Tells us that the sentiment in these actual purchasing contracts was null and void, wasn't really with the market, and sure enough we saw this massive candle on the downside a couple of days ago, which has really broken through all the moving averages through this upside trend consolidation. You can see we're squeezing swing high, swing high, swing high, swing high, failure of that, and we're moving lower, and in doing so it's taken us below the 13,1600. If we can stay below 13,1600 and the RSI can stay below 50, then we're looking at a bearish sentiment triangle overall. You can see the CTC on either side now, and our hourly is still looking very negative. All the moving averages above price. So if we can find, or if price can stay below 13,1600, then we should be looking for potentially a resistance level here at price support before we see a further continuation to the downside. Moving on to sterling, let's have a look and see what's been happening in the weekly. Clearly see the institution moving average, the 50 period moving average, all coming to play at the 1600 area. Noticeable support and resistance through the 1600, very much a psychological barrier or target is another word probably. Okay, and you can quite clearly see there was a lot of hesitation, a little bit of hesitation, a lot of support through here, further support through here, bit of hesitation through here, and noticeable resistance through this part. So 1600 psychologically very strong support and resistance level, plus we have the institution moving average, plus we have the 50, a confluence, a lot of indicators at a single point. Okay, something's got to give. You take higher swing high on the weekly. You can see we've gone to the squeeze pattern now. Where's price come from? From a very negative stance. You can see we're trading lower, very much lower. Okay, so as it stands now, this is looking very bearish indeed, and you can see it's all coming together now on the bigger time frame. I mean, this chart goes way back to 2007 when we were right at the height of the sterling against the US dollar, trading at almost, it was almost like $2 to the pound. Or so very, very strong. And now you can see way down here, and we're meeting up now. There's a clear confluence now, and something's got to give. And because we're in a bearish trend, swing low, swing low, swing low, swing low, swing low, each one, then the outlook is potentially we're going to see a pullback. Okay, now if you look at the current market situation in the UK, not looking all that great, not a hell of a lot of expansion. Some good news yesterday coming filtering through, but that's going to take a little longer than normal to pan out. Looking bullish at the moment now. If you look at the daily, trading above the institution moving average, which is very, very important. Because as time goes on, if it's trading above the institution, then the market's still favoring higher moves. Okay, so that's very important to understand. As long as the trade above the institution, then fantastic. Then there's positiveness in the market. The only difference at the moment now is the 1600 is still clearly above price. Okay, it's a very strong resistance level. See quite clearly a lot of hesitation in and around this psychological area, and we've seen price falling lower. We did have a break a number of days ago, but on a spinning top. So we wanted to see the next candle after the spinning top being a decision candle, because the spinning top is an indecision candle. We want to see a decision so we can trade decision, and that decision we were hoping was going to be upside bullish because of this nice break above the institution, pushing higher and trading above the psychological 1600, but we were brought back down to these areas again because the bearish we had an ensuing bearish candle, a very negative bearish candle that brought everything down, and in doing so, this little intermediate trend upside swing high was breached, and now cancelling out this upside trend and testing these lows that we had recently, i.e. the 5900 in particular. Price has been there on a number of occasions, so you can see where price is trading out just on the underside of 5900. So if price can get above 5900, then psychologically we could see a potential for a reattempt of those highs at the 1600 quite soon. Because if you look over here, 5900 was a very strong resistance level for a long period of time through the most parts of this year. Okay, so if we can get above that, a lot more. Yesterday's candle closing higher after a lot of bearish sentiment in the first part of the day, testing the institution moving average and now moving higher. So there were more buying contracts at the end of that. However, still in the steep decline, and you can see prices now, yesterday in particular, failed to close above the psychological level of 5900. If it had, it would look really bullish. Okay, breakout fell, then we could have definitely seen a reattempt at it, because 5900 is a psychological support, a very strong one through most parts of this year. But because it fell and closed lower than the psychological side of it, even though there was buying, it wasn't really all that convincing buying, more profit taking from the initial move to the downside. However, as we're going into a lot of the news today, we have the very important official bank rates, or the interest rates announcement this afternoon at 12 noon GMT. And we also have the MPC rate statement. So very important, the official bank rates. We have interest rates at 0.5%. A lot of people don't seem to think that Merv King and his sidekicks will actually improve on that. They might just put out at 0.5%. The only downside is inflation rates. You've got to look at the inflation, etc. like that. Quantitative easing. Is the UK government, unlike what the US did, said no, there's no need for QE3? Will the British government think about still implementing easing, storing some money, throwing it in the markets? Quantitative easing, I think it's 3 or 4, or there's talk about that. If the government says no, there's no need for it, then you're obviously going to see further negativity in the market. Ideally, a lot of people would like to see more thrown at it, but it remains to be seen. Okay, we don't want to speculate. We want to see what the market, the genuine market, sees in this in the news. So if you're not trading, as I mentioned, don't trade. Rather stand aside, wait for the market to come up with its own hand, take it all in, take all this news announcement and regurgitate it, and we'll trade whatever it is that is. But at the moment now, looking very bearish at the moment, because 1600 is clearly a resistance level, a very strong long-term resistance level. Okay, so it's going to have to do quite a lot to be back up above 1600. In fact, we wanted to be trading above 1600, because the longer we go sideways here at 5900 and 1600, it's still bearish consolidative, because we're trading on the underside of that. The daily nicing, it's still trading above the institution, which is fantastic. The longer it spends above the institution moving average going sideways, and the more likely you're going to see more buying sentiment being built up into this move, and we could see reattempts at 1600. But as it stands now, we're trading lower, so 5900, guys. Let's just say by the end of this week, if it's trading above higher than 5900, then ultimately we're still looking at potentially 1600 being our next target going into the next week. If it's still trading, if it's trading lower than 5900 long term, going to next week, then we should still look for bearish sentiment to the downside. Looking at the 4-hour chart, you can see from those lows over here to the high of this extension, this upside trend, now you can see that the 23.6 here at 50.95 has been breached. The 38.2 was breached. Price went all the way down to the 50%, which happened to be the institution moving average here, at roughly around the 158300 mark, and then we saw the bounce higher. Consolidation after this move to the downside, and now trading back up again above the 38.2 level here at 1586,789, just below. So just below the 5900 mark. Okay, ideally you want to see price trading above 5900. The sooner it gets above 5900, a very strong support and resistance level, then the likelihood is we're going to see reattempts of the 1600 mark that we saw just recently. A lot of indecision going into this. The last 4 hours being very indecisive. Asian session very indecisive. It's only the latter part of yesterday we saw some great news out for sterling in terms of, what do we have? Yesterday we had some great figures. We had sterling services PMI results coming out favorably. We also had Halifax PMI month-to-month figures that were fantastic. They were expecting a negative 0.3, came out at 2.2 positive. Before that, on Tuesday, we had construction PMI, which came out 3% higher than the forecast. What else we had? Manufacturing. So there's been a lot of news, good news, out of the UK market, which is good. You know, long may it last, because if that happens, then we're going to see the sterling do a lot better than most currencies out there at the moment. So this is where it comes into question. Will we see further continuity of eating, or QE3 or QE2, or what do you want to call it, from Merv King and his sidekicks? Interest rates, will they stay the same, etc, etc, etc. So at the moment, our 15,900, very strong price support and resistance level. Got to see that being breached. And our support above this would definitely confirm that we're going to see a bigger pullback. If this is January break, so if this is your high now, you can see how far this pullback might happen. So this is your all-time high to the pullback. You can see noticeably that price has definitely bounced at this level here, and we've bounced back. It's broken above 22.6. Okay, now it's trading above that. So if it stays above 20.6, then 38.2 will be our next target. Okay, breakout, pullback, found support here, then higher. See, it's gonna go between these 2 points up, because these two retracement areas are sandwiched. Well, the 5900 is sandwiched between these two fib numbers. So very, very important that we get above the cycle of 1500 to start with. Otherwise, we're going to see hesitation before we see. This is just profit taking after this initial breakout. People taking profit, and then second extension to the downside could occur. Hourly chart, you can see the institution moving average above price, all negative. RSI below the 50% line. Sell, sell, sell. We're having a pullback here. You can quite clearly see, as I mentioned. So you take your all-time high here just recently on the 2nd to the lows here yesterday, and you can see the bounce. So bounce higher than 23.6. So you can see that this intermediate downtrend has been breached now. Swing low, swing low, swing low, swing low, swing low. Oh, swing high. So now cans, but it's still trading under the institution moving average, and as long as it maintains underneath the institution, then it's still looking bearish sentiment consolidation. So it's vital that we get above that again to show that sentiment is looking favorable upside again. Otherwise, we're just consolidating in a bearish trend before we see a further a reattempt of those lows. So swing high, swing high, swing high, swing high, swing high, break of that swing high, trading low now, find resistance, then continuation low, and the direction is broken out. Okay, so it's important that we do see. If this is genuinely just a pullback over the overall aspect of things before we see another push back up towards 1600, then we want to see a nice bullish engulfing here with the reattempt of these 1595s before we see 1600. Okay, let's have a look and see what's happening on the US dollar Swiss franc, good old Swissy. Weekly, pretty much just trading on a channel, not really giving anything back to the market. We have had some upside movement, however, just going sideways on a channel between 2 points. We had a bit of a resistance here, a nice little shooting star resistance here, and we saw some bearishness the past couple of weeks. However, this week in particular, we've seen a lot of upside movement from the US market. And you can see quite clearly on the daily, there it is, a lot of indecision or consolidation here to support area at 9020. Want to see a breach low to see if this was definitely to still remain bearish sentiment ultimately, with an outlook at 8950 is potential target. That never materialized because we never saw any bearish engulfing candles there. A lot of wicks. As I mentioned, the more wicks you see, the more indecisive market is. You want to see genuine candles with little wick. And we're looking for a genuine candle breakdown with little wick to confirm that this was still bearish sentiment. But that never materialized. We started seeing a lot of hammers here, a lot of spinning tops. Then we saw some hammers, more buying sentiment, then selling sentiment. And then bang, we had this massive bullish engulfing, which is engulfed this entire range if you think about it. So all this indecision here took that all away from the market. So that's a very decisive candle, and sure enough, people got on board and started to purchase. Okay, by doing so, taking above the institution moving average, which we were trading below. So as I mentioned, if it's trading below an institution moving average, then it's still a bearish outlook. Now it's above the institution moving average on our 4 hour, so it's looking more of a positive outlook. Very, very important. So now we're above. Where's it going to go to? Well, long may it return, because we can go as high as these areas here, back up to 931, 932, anywhere in this area here will be our next target on this pair. Okay, so get above 932, then there's more highs. So great, fantastic. Let's hope see if it can actually hang on to those. So you take the low that we had recently up to the high. Okay, you can quite clearly see resistance 61.8 here, clear resistance level. And then we had another one here at 50%, another support and resistance level here. 38.2, another resistance support level here. Price actually shot straight into it, and then we saw price putting back. So now if it remains above the 9.1, what do we have here? 11, 12, 13. 9.1, 13. Then we can find support before we see a reattempt of the 9.18, etc. to the upside. Okay. Lower swings depicting downside movement, and now that these swing lows have been breached, so now this downtrend has been cancelled. Okay, see, I'm putting it all together. Swing low, swing low, swing low, swing low, swing low, swing low, depicting downside movement. Now, because we had this break higher, it's now cancelled this swing low, or this down move, and now we should be starting a new trend, hopefully. So, if you can find support here above the 913, then with a nice bullish engulfing after this pullback, then potentially what we could see is price moving higher. So this is our low, and this is a genuine pullback. So we take it to the higher. You can see 23.6 is in play right now. Okay, on this little extension here, the pullback. If we get a fib, get a nice hammer here, a bullish engulfing on the 23.6, which happens to be also coinciding with another 50% here, there'll be a nice strong support. Okay, see the confluence of two fib areas or lines. Then we can see a genuine bounce to the upside. So it might be a potential to catch some nice market moves to the upside on this. Last pair of the day is US dollar Japanese yen. Let's have a look. Weekly, you can see I've still got all my lines I've drawn here over the couple of days, past week. So price has really been maintaining as highs, and sure enough, we went into the 8400, which happened to be a very strong support and resistance level. And we've seen price pull back since then. Past couple of weeks have been bearish sentiment. However, notice how price has been going sideways. And if you take the low here from the start of this upside move to the high of this candle, notice that the 23.6 has been a very strong support for this pair for the past couple of weeks, or the past month. Okay, going into, well, it'll be the month end of this week. But you can see clearly that the 23.6 has been a very strong support for this pair. It's just consolidating. There we go. Just on the side. See this breakout? Top side now finding support. A lot of wicks below. However, the actual trading range is closed above the 23.6, which happens to be our 82 mark, 82.20 mark. Okay, so as long as price can stay above this, then obviously what we're seeing is just a pullback before we see a potential for another upswing to occur. So the longer it goes sideways, and we can see some genuine buying sentiment creeping in, then we should see potentially another reattempt of 8400 quite soon from the US market. You look at the daily, for example. See that area I mentioned again, 82, just going sideways. Okay, where will it leave us? Oops, apologies. You can see quite clearly a lot of fibs coming into play here. So very strong support as it stands at the moment now. Yesterday bearish. I mean, this is a nice bullish candle here. However, yesterday's trading range not getting above some prior highs. You can quite clearly see here, for example, a lot of resistance at the top here, body resistance, just below the 8300 mark, and sure enough, we saw price pulling back at the close of play yesterday. However, Asian session trading last night, going into European session this morning, traded low end, so we still saw some selling sentiment in the market, but it's still above this 23.6. It's still in this area here. Ideally, we'd like to see a clear break below this. Get a nice bearish engulfing here. Going into the close of tomorrow, we'll definitely signal that we're seeing a lower swing, a real failure of lower swing here, and we should be looking back down towards 8100 as a genuine target to the downside before we see 80 at the 50% retracement and 79.10 at the 61.8. Okay. Otherwise, look over here, for example, a lot of wicks to the downside, more buying sentiment. Price hugging the upside of these candles, showing us that sentiment is still pausing, preferring to go long, but we're still capped. Okay, so we want two things to happen. You either want a bearish engulfing to take us below the psychological major support. Okay, and if we get that psychological break of that major support, then we're going to see further shorting opportunities arising. The other opportunity is going to have a nice bullish engulfing candle here. Potential from the news we're going to see of non-farm payroll unemployment figures today. If we do get that, then we'll signal that we should be looking at 8400 and higher, as this consolidation now has been formed, and we're seeing a lot more buying sentiment creeping in. So rather give this to the market. It's far better to wait for a genuine sentiment candle. We don't want to be guessing if price is going to go higher, it's going to go lower. We just want the market to tell us, yes, we are looking favorable long or favorable short for the foreseeable future, and then we will trade that. That's it, guys. I hope you have a fantastic trading day. As I mentioned at the start of this video, lots of news for today and tomorrow. If you're not in any trades, I would suggest you stand aside. Don't try and speculate what the market's going to do. It's far better to wait for a genuine sentiment candle to tell you where the the overall public or the overall institutions, the overall are looking to trade, and then we'll trade with them. We don't want to trade against them. Okay, it's pointless trading against the major flow. It's far better to trade with the flow. Okay, so we want a genuine with the flow candle or sentiment candle to tell us, yes, we are genuinely going in this direction, yes, we're not going in this direction, and then we will trade. Okay, don't want to try and second guess the market. Just make your trading a lot harder to do, and you'll find you'll be coming out with more losers than winners. But other than that, just if you are in trades, please make sure that your stops are tight and you're aware of any news announcements that might potentially move the market quite quickly. So keep that in mind, and I'll see you first thing tomorrow morning for non-farm payroll. Until then, trade serenely.